The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
You're going to hear about a couple of interesting growth and income stocks now with some interesting stories behind each one from the editor of our Income Investor Service, Brian Hamilton. Start with General Motors, been a big mover lately.
Yeah, General Motors recently reported earnings where they beat the Zacks consensus earnings and revenue estimates for the second consecutive quarter. Now, Q4 and fiscal year 2017 were record-setting years for positions for the company. They saw a growth in total market share. They saw diluted EPS records. They saw adjusted margin records. In North America, they saw adjusted margin records and GM financial records as well. Now, the big story behind GM as late has been the international growth. Now, as Americans, we look at things that happen just in America, and we think that, hey, everything that happens here just spreads through the world. Now, while we do have an impact, the growth on the international side is outpacing the current domestic growth. And this is shown by North American auto sales were 3 million units for GM. Just in China alone is 4 million units. Specifically in America, there's 0.8 cars per person. In China, there's 0.1 cars per person. So management has been really focused on this international segment. Now, one of the areas they're fixing to do this is their electric and autonomous vehicles. Now, by 2023, they're expected to have 20 new electric vehicles on the market. Now, this is really important because China and India's government both have set new emission standards. So these electric cars are expected to be a nice growth driver for the company going forward. Management has also been focused on preferences of the consumer. The consumer has been really pushing away from the passenger cars and looking more at pickups and crossovers. Now, specifically the crossovers, GM can make the crossovers at a cheaper price and sell them at a higher price, which is really helping their overall margins while they're producing record margins both internationally and domestically. Mm-hmm. Management is expecting to issue 2 new pickup vehicles in 2018 and 4 new crossovers in 2018 as well. Now, management has guided for 2018 in line with previous EPS and revenue expectations, but these are off of a record-setting 2017. So it's expected to be a nice, solid year for GM as well. As we were initially saying, these earnings and these positive stories has really caused the stock price to jump as of late. Yeah. And analyst estimates have improved as well. If we take a look at the analyst estimates page, we can see here we have almost unanimous agreement on the upside for both fiscal year 2018 and 19. With estimates all being positively revised on the upside. So this is a really nice, solid growth story for the company. It's a long-term view because these electric vehicles are coming out about 2023. So we're looking at a long-term growth story with a huge 3.59% annual dividend yield as well.
Lockheed Martin, another one on your radar, recently won a big contract for PAC-3 missiles.
Yes, they have won several new contracts. Now, we're only on February 8th today. They have signed just in these 8 days just under $800 million in new contracts. Wow. And they have been consistent on signing these contracts. You ever scroll through the news feed of Lockheed Martin, you'll say, oh, they just won a $100 million contract, $200 million Navy contract. And this is a very consistent revenue driver for them. Now, these new 3 contracts go all the way out through 2021. So it's a nice long-term view for the company as well. Now, we have a couple other growth drivers for the company. Is their new F-35 fighter jets. Now, these things are a marvel of engineering. In fiscal year 2017, they delivered 66 of these jets to the U.S. government. Now, they're expected to continue to ramp up production all the way through 2020, where they're going to produce about 178 of these fighter jets and have about 750 in total operations. Now, at the same time, while they're building these jets, they're also maintaining them. So we have nice 2 areas of revenue stream. Mm-hmm. We also learned earlier this week that Congress tentatively agreed on a 2-year budget deal. This budget significantly increases defense spending, so this is a really nice other growth driver for the company over the 2 years. As we also said, their new contracts are coming in and their previous contracts. So these 3 big areas are nice, solid, long-term growth drivers for the company. Now, during their amazing earnings announcement where they beat the Zacks consensus earnings and revenue estimates by a large margin, management also guided in line revenues with their already high expectations for revenues, but they also increased their EPS guidance in the high-end range of the previous estimates. Now, this has caused analysts to increase their estimates as well. If we take a look at their detailed estimates page, we can see here that we have almost unanimous agreement for the next 2 quarters and the next 2 years. As we can see here, we have nice boosts for the quarters and for the annual estimates as well, especially with 2019 jumping up almost $3. So all at the same time, while we have this nice long-term growth story for the company, they pay us a solid 2.32% annual dividend as well. So we have two companies that have really good growth expectations over the next 4 or 5 years, and really nice dividends as well.
All right, do you own either one?
I personally do not, but I hold them both in an income investor portfolio.
All right, don't forget, more stock information always available on our website, Zacks.com, and all you need to do to begin to access it is get on over to the homepage. With Brian, I'm Terry Ruffalo.